But we do know is that the risk is now at a level where it's never been in history, as far as I'm concerned, because we have never had a crisis, financial crisis, a debt crisis of this magnitude before. We never had bubbles of this magnitude before globally. It's existed in certain countries in the past, but not across the world. This is why, there's no one to save you.
Welcome back to Liberty and Finance. We are delighted and privileged to have a first-time guest today. Egon von Greyerz is the chairman and founder of Matterhorn Asset Management. He joins us this Friday, October 20th, 2023. Egon, thank you for coming on Liberty and Finance this first time.
I look forward to our discussion.
Our mutual friend and your working associate, Matthew Piepenburg, has been with us several times, interviewed by my son Elijah on our channel, and it's our first time to be able to have you as a guest here. Our subscribers and viewers are eagerly awaiting your perspectives on many of the things that are on their mind and concerning them about our world today, especially their financial lives. And you're widely followed. You have a long history, a long reputation, and a great expertise. Your most recent article, a 1987 crash in stocks with a golden dawn for oil and gold, draws parallels between what we are seeing setting up right now in major markets, not only the stock market, the economies, inflation and money printing, and oil and other commodities of essential use, as what we've seen in the past. And you draw the parallels of how those things played out and how you foresee this playing out in our current environment. Certainly most recently, we've seen this new escalation of conflict in the Middle East that generally in the past always signals a disruption in the world's oil supply, as well as a concern about geopolitical instability in general. Could we start there and help us understand where you see parallels between what happened in oil in the past versus what's happening right now?
Well, wars always have a common factor, and normally over time wars are linked to debt, of course. Governments very often, or leaders, start a war when they're under pressure financially, because then they can print more money that they don't have, and then they have a reason they can explain it to their people that obviously we need to win this war and we need a lot of funds. So that's common, and then wars are always very often religious, which we're now seeing clearly with it. I've been around for quite a few years, and I've seen so many conflicts in the Middle East, and they will never end, sadly, or unlikely to end, I would say. And then linked to that, in modern times, energy, of course, and oil has always been part of wars also. And now, since you start asking about oil, we're looking at in the Middle East. There we have the Strait of Hormuz, where almost all of the Middle Eastern oil has to go through, and that's a very narrow passage between Dubai and Iran, and that's about 22 million barrels a year going through that, which is about 25% of annual oil supply. And if this war escalates, then we are likely we could very well see Iran closing the Strait of Hormuz. Of course, the US is going to try to stop it, but it's not very difficult to stop that, because Iran is in such a good strategic position there on the side of it, and therefore, and they would probably get the support of Russia also. So that's how, if this conflict escalates, I could easily see that happening, and that will be, of course, economically a massive blow for the world, and then it would also escalate the war, of course. So, and the risk is here that this develops into global conflict. It is already, but still limited in two regions. And obviously, we all hope that it will stay at that. But, the sad thing is, and this is my main concern, is that the superpowers, and here we're talking about primarily the US, in my view, the only solution here is sending money and sending weapons. I mean, that's what they've done to Ukraine, and now they're doing the same to Israel. No war can be resolved by money or weapons. Sure, you can win a war by killing everybody around you and bombing everything to pieces, but that's not really winning. But what is sad is that, first of all, there is not a single statesman in the West, and sadly, the biggest economy in the world, the U.S., has now got a leader who is too old and not capable of running the country, and we don't even know. We can guess, but we don't know exactly who's running the country because they're not accountable. The ones who are actually taking the decisions below him, and so. But you have Biden, and you have and then the European leaders. They're just followed by the U.S. They have no say of their own. There's not a single statesman there either, and therefore we have a situation when there's not a single country or leader that takes the initiative to make peace here. But instead they're sending weapons and money. And you take Ukraine, half of the weapons get lost. Someone else takes care of them, and a lot of the money also finds its way through nets of corruption, etc. And now we'll have a similar thing in Israel. So this is why I was born right at the end of the World War II. And of course, I didn't see the build up to that, but I can see the build up to this now. You start with a small war, you start with economic problems in the world, and then another war starts, and then nations take side, and no one attempts seriously to find a peaceful solution. And you could see how this can escalate, and no one knows where it will lead to. But this is my great fear now. I have for 25 years been talking about the risk of economic collapse. I mean, I could see that clearly, and I think even today a lot of people can see it. But the geopolitical side, how that escalates is harder to forecast. Although we are this era now is an era where we have war cycles. I'm not an expert of war cycles, but I've been studying it, and clearly, so that war cycles are part of the end of an era, and that's what we're in now. So it's a pretty dire time for the world, and the people obviously need to protect themselves, but protecting yourself financially is one thing, but protecting yourself physically is a totally different thing.
However, wars seem to be connected in multiple ways to our financial lives. It's been said all wars are bankers' wars. You mentioned the geopolitical ulterior motives of leaders who find themselves in trouble trying to shore up their political position by instigating or escalating wars and rallying their people to, let's support the fatherland, let's support me as a leader, etc. You don't want to change horses in the middle of the stream. Can you draw the connection now for us, as you did in your article, between wars and the financial situation we find ourselves in as well?
Yes, well, obviously, that wars are costly, incredibly costly. And if you take the US, was already bankrupt before these two wars started. And when now they need to raise hundreds of billions just to finance these wars, there is no money around. There ain't no money. They haven't got any money, and nobody's asking where's the money coming from. We can afford to finance two wars. I mean, that's what Yellen said. No problem at all. They can't. But so how do they deal with it? Money printing, of course. Just issue more debt. But the U.S., as I said, was financed primarily because the dollar is the reserve currency of the world, and people have been investing in dollars for now many decades and holding the reserve assets in dollars. I think that time has passed, but now, of course, fewer and fewer states or sovereign states are prepared to hold U.S. treasuries. And we see country after country reducing the level of U.S. treasuries. And so we are now, and on top of that, the U.S. is, of course, increasing the deficits with no chance of financing them outside of the U.S. So what they do, well, first they issue the debt, print the money, and then they buy their own debt paper because no one else is going to buy U.S. treasuries. So we have a vicious circle here, which will mean that the dollar at some point will become worthless, and so will treasury debt. I mean, I wouldn't touch bonds in any country, but certainly not U.S. bonds. And the world hasn't discovered that yet. This is a sad thing. People are very late in discovering anything, including gold, which we're both interested in as a means of wealth preservation. People buy gold, sadly, often when it goes high. Nobody buys when it goes down and is cheap. When we started buying gold in a bigger way in 2002 at $300, it was unloved and undervalued. And now it's still unloved and undervalued, and there's still not more than 0.5% of world financial assets in gold. So it's got a long way to go. But again, so that's the wars have to be financed, and that is always in history been the case, and that governments at that time, it's accepted by the people because it's a crisis situation that the debt goes up to could be even 200-300% of GDP temporarily. But U.S. debt has been going up for years, and in all cases only whatever it is, 120% of GDP. But now it's going to escalate further, and this is just going to precipitate the fall of the U.S. economy and the fall of the U.S. government. And talking about reserve assets. We have seen most central banks, of course, holding the dollar as a reserve asset. Now, when the U.S. confiscates dollar holdings of other major states, like they've done with Russia and will do whenever they don't like a country with any other country, who the hell wants to hold their reserve asset in dollars that can be confiscated at any time? So people will flee away from dollar as a reserve asset. And what I can see in coming years is gold becoming the reserve asset of choice that central banks will hold the reserves in rather than dollars. So that in itself will, of course, create a very high demand for gold. And obviously, the market couldn't cope with satisfying that demand at current prices. So we are talking about a major revaluation of gold over time. That's not going to happen overnight. It'll be a gradual process. I don't believe in a reset overnight. I never believed in a reset. Things don't happen that way. Therefore, but over time, as more and more central banks start investing in gold, and we've seen it already in the last few years, central banks are continuing to buy gold, mainly in the East. Most of the Western ones are not buying it, but in the East they are. And that trend is going to accelerate, in my view.
You mentioned earlier in this discussion the plight of not only the dollar, but the U.S. Treasury bonds as holders of those realize that the U.S. is bankrupt and is no longer able to service its debt, et cetera, other than through the monetization of money printing that you mentioned. Can you talk to us about what are the naturally predictable outcomes of the failure of confidence in the bonds of the U.S., perhaps on banks, on pension plans, on individuals, et cetera?
Well, it will clearly be disastrous. And if you add to that the derivatives market, most financial transactions have an element of derivatives in them. And a lot of transactions have a lot of derivatives in them. I mean, a lot of funds, etc., have no real assets or real paper in them. They have just synthetic ones created by derivatives. And of course, so you're not talking about only a global debt of 330 trillion or so. You are, and I've written about this. You're talking about it could be, the total derivatives. Nobody knows what they are because you have this shadow market and you have outside of balance sheets, etc. But in my estimate, the derivatives could certainly be 1.5 trillion or more, maybe up to 2. And that's really what you're looking at here. That has to unwind at some point. If the debt market comes under pressure, and if the U.S. Treasuries come under pressure, and so if those derivatives will at some point have to be saved, if you want, by central banks, but they will issue even more money to save the banks and to buy derivatives, etc. And that's why, and this is why you see how exponential growth or exponential collapse can happen so quickly. I think we're not there yet, but that can come out of the blue. I don't want to be a prophet of gloom and doom, and I'm because nobody knows what's going to happen, or how it's going to happen, or when it's going to happen. But we do know is that the risk is now at a level where it's never been in history, as far as I'm concerned, because we have never had a crisis, financial crisis, a debt crisis of this magnitude before. We never had bubbles of this magnitude before globally. It's existed in certain countries in the past, but not across the world. And this is why there's no one to save you. Sure, in the past, if Argentina went under, or some South American country, or some East European country, etc., then it could be saved by other sovereign states. Now there's no one big enough to save. First of all, you got the U.S. No one can save the U.S. The Ponzi scheme is finished, and 2008 was a rehearsal. 2006-9, if you want, was a rehearsal, and miraculously they managed to delay the problem for another few years, or quite a long time, 15 years. But now it's back again, in my view, and this time I don't believe that money printing will save it. So we are in for a very vicious time now. And as I said, we don't know when. All we know is that the risk is there. It's going to happen. It could happen tomorrow. It could take a year, it could take 5 years or whatever. But the only thing we know is that the people who can, they should try to protect the assets that they have. At least you can't protect everything, your family, etc. It's much more difficult. But nevertheless, physically you can't. It's not that easy to protect everyone when you are talking about the war. But nevertheless, financially, we can all. Anybody who has a bit of savings can certainly protect it by owning gold and a bit of silver also. This is why we 25 years ago went into gold. We saw gold as the best protection against what was coming, against the risk. And the good thing is that if you hold gold over time, every single currency has gone to zero without exception, over thousands of years. So therefore, over time, gold always goes up because it's measured in worthless currencies that always goes to zero. And therefore, it's such an easy game, such an easy investment. And still, most people don't understand it and don't hold it. And you've got to be patient. It's not, of course, now it's all about instant gratification investments. But if you hold it for the long term, you're always going to maintain your purchasing power and do okay with gold. That's why you should hold it.
On that topic, in the face of all of this turmoil that you've outlined, so interconnected and is amplified by the derivatives complex that's built on top of it, you have a threefold statement about gold that I find provocative that I thought maybe you could expand on. One is gold will be your savior. You've already touched on that. The other second part of that is gold's real journey hasn't started yet. And the third part, perhaps the most distressing for most people, is because when gold goes to the levels which I now feel certain it will, the quality of our lives will be considerably worse than today. Could you fill in some of the gaps there?
Yes. So, okay. The first one is we talked about the journey, as you say, because gold is only held by 0.5% or 0.5% of world financial assets are in gold today. And we've been into gold for 25 years as a company, and we've been growing every year. But it's still so minuscule. We're there really we have a passion for helping people to preserve wealth. That's really what we're trying to do. But so we have obviously a group of dedicated investors from around the world. A big group, but and they're high net worth individuals. But that's nothing compared to everybody that needs to protect themselves. But what I'm saying is, since nobody has actually bought gold today, and gold is still at a very low level, although we've been in it for 25 years, I tell my colleagues and I tell our clients that the real move or the real journey in gold hasn't started yet. It's about to start now, and also technically, this last correction that we saw in gold a couple of weeks ago, or just over a week ago, really. That was the final correction of a small correction we're talking about. Remember, and I think now the gold is on its way to a lot higher levels. And remember, gold has been now consolidating in most currencies at the top, at the peak, even in dollars at the peak. Okay, it's not much higher than it was in 2011-12. At that peak in dollars, because the dollar has been strong temporarily, in my view. But in all other currencies, gold has made a new high. So gold is consolidating at a very high level, and the next move, which is starting now, however fast it will be, it could be very fast. It's going to take us to highs that no one can imagine. And as the crowd always waits until it makes headline news in papers and on television, everybody will pile into gold, of course. And on top of that, as I said, sovereign governments will also have to hold gold as a reserve asset. So that journey is just starting, and as I said, it will be a major move. Sorry, what was your last point?
Well, you said when gold goes up to the levels you foresee, the quality of our lives will be considerably worse than today. So you said you tell your clients they mustn't wish for gold to go up substantially.
Yes, absolutely right. I mean, that this is, gold goes up for several reasons. But one is, of course, just because we measure it in money that goes down in value the whole time. So just by printing more money, gold will go up automatically because we value it in money that falls in value. But the other thing is that the real catalyst for gold is very often that events happen, major events, and here we have a potential major event of global war. And that linked to, as I said, change in reserve assets in the world. So, that I'm afraid that the high gold price that I could see in coming years is going to be in a world that is not going to be easy or pleasant to live in, definitely. So that's why we shouldn't wish for high gold. We should just hold it as insurance. It's like when you buy fire insurance. You don't buy it because you wish your house to burn down. Just if it burns down, it's good to have. And here, the advantage of gold is that it's not just an insurance that you need to pay a premium for every year to renew. Gold holds its value better than any money or any investment throughout history. So it's a wonderful insurance to hold. On top of that, it actually looks good too and shines. Yes, and people will now wake up to that too. But as I said, it's going to be a bit late, and it's going to be at the time, as I said, when there'll be a lot other problems than just worrying about finances.
For people who would like to take advantage of your services that you provide at Matterhorn Asset Management, how can they find out more, and what services will they be able to take advantage of?
So, first of all, our website is goldswitzerland.com, goldswitzerland.com. And we really cater for high net worth and ultra high net worth individuals. I mean, we have associated companies that deal with smaller investors, but the whole purpose is we help investors to buy gold outside the banking system, and we help them to store it in their name. They have access to their gold, etc. So we are not in any way we're just an intermediary, but not a principal in this. And so we have quite high levels of entry. Vaults in Zurich and Singapore is $400,000, and in our Swiss Alp Mountain Vault, which is the biggest private gold vault in the world, there the minimum is 5 million. So we understand that it's not for everybody, but as I said, there are other companies that do this on a different level that we are also associated with. So that's what we do we are in about 90 countries around the world in that field. And obviously we do silver also. But gold is really the king of wealth preservation as far as we're concerned.
We've been speaking with Egon von Greyerz, the founder and chairman of Matterhorn Asset Management. Egon, thanks for coming on Liberty and Finance.
Dan, it was a pleasure to talk to you. Thank you very much.